What if I told you that the global economy runs on the same logic as a scam? That every dollar you save, every pension you contribute to, every mortgage you pay, all feed into a structure that can only survive if more people keep joining beneath you, sending their money upward. This isn't some shady Ponzi scheme hidden in a dark corner of finance. It's the very operating system of the modern world. And here's the hard truth. The only reason it hasn't collapsed yet is because governments, banks, and central banks keep feeding it with new recruits, new credit, and new illusions. The question is, who will be crushed when it does? To understand that, we have to go back to the beginning, to what a pyramid scheme really is. It's not complicated. A pyramid scheme promises extraordinary returns, but instead of creating real value, it pays old investors with the money from new ones. The illusion of success keeps it alive until the math catches up. Charles Ponzi made it famous in 1920. He promised investors 50% returns in 90 days. At first, he paid them back using the cash from new believers, creating a self-reinforcing cycle of greed and confidence. But every layer required more people than the one before. Within months, the structure collapsed, leaving thousands bankrupt. Ponzi went to jail, but his name lived on, because the logic of his scheme never really died. A pyramid requires infinite growth in a finite world. Eventually, you run out of suckers. Now here's the disturbing part. Strip away the legal jargon, and the global economy works the same way. Governments borrow trillions, not from wealth they've created, but from generations that haven't even been born yet. Corporations gorge on debt to fund stock buybacks, inflating share prices while mortgaging the future. Households live on credit cards and mortgages, paying interest forever, while the principal barely moves. And the money itself? It's not backed by gold, silver, or anything tangible. It's created out of thin air, every time a bank issues a loan. Most people imagine money being printed by governments, but in truth, it's lent into existence. Under the system of fractional reserve banking, when you deposit $1,000, your bank keeps only a fraction, say 10% in reserve. The rest is lent out, creating new money on paper. That loan is deposited somewhere else, where another fraction is kept, and the rest lent again. From a single $1,000 deposit, the system can generate several thousand in credit, claims stacked on claims, confidence layered upon confidence. On paper, everyone looks richer. In reality, it's a pyramid built on faith. And as history shows, when that faith cracks, the whole structure trembles. Bank runs, collapses, bailouts. 1929, 2008, the story never changes, only the numbers get bigger. After World War II, the world rebuilt under the Bretton Woods system with the US dollar tied to gold. But in 1971, Richard Nixon closed the gold window, severing that last link to anything real. From then on, the global economy became a creature of pure fiat, money backed only by belief and power. And belief is fragile. To keep the illusion alive, governments promised endless growth fueled by debt, inflation, and your labor. Sound familiar? That's the architecture of a pyramid. Even the systems you think are stable, like pensions or social security, operate on the same logic. The money retirees receive today comes not from a vault of savings, but from younger workers paying into the system. As long as the base of the pyramid keeps growing, it holds. But what happens when populations age? When fewer young people support more retirees? That's what's happening in Japan, Italy, and even the United States. Governments patch the gap with more borrowing and more printing, but every fix only deepens the hole. The housing market follows the same script. For decades, home prices have been justified not by intrinsic value, but by what new buyers can afford to borrow. Every boom feeds on new entrants. When affordability collapses, the base shrinks and the illusion shatters, taking people's life savings with it. Even financial markets are pyramids in disguise. Stocks rise not only on earnings, but on the belief that someone else will buy higher tomorrow. Crypto, the purest pyramid psychology ever created. Early adopters profit only if new believers flood in. But it's not just crypto. The entire system depends on perpetual belief. Belief in growth, in liquidity, in rescue. And when the pyramid starts to crumble, the central banks arrive, the masters of illusion. In 2008, when the housing pyramid imploded, the Federal Reserve and other central banks printed trillions. They called it quantitative easing, but it was simply creating new money to pay off old debts, pumping life into a corpse. Losses were socialized, profits stayed private. The pyramid didn't collapse, it expanded, and you paid the cost, through inflation, through stagnant wages, through the slow erosion of your purchasing power. History has repeated this pattern countless times. The the South Sea Bubble of 1720, the Great Depression of the 1930s, Japan's asset bubble of the 1980s. Each began with euphoria and ended with collapse, because every one of them required endless new money and endless belief. When the belief died, the pyramid fell. The unsettling truth is that we've simply normalized the pyramid. We don't call it a scam, we call it growth. We call it stimulus. We call it the economy. But if a system can't survive without constant injections of new debt and new believers, it isn't a foundation, it's a trap. And we're standing at the bottom, holding it up. Today, the pyramid is larger than ever. Global debt exceeds $300 trillion, 3 times the world's annual economic output. Think about that. The entire planet owes 3 years of labor just to break even. And still, leaders tell us the solution is more debt, more spending, more of the same medicine that made us sick. It's a Ponzi scheme everyone knows about, but no one dares to stop, because the moment it pauses, the whole thing collapses. That's why inflation feels like a constant thief. It's not random. It's how the pyramid feeds. Every time new money floods in, prices rise faster than wages. Your savings, your pension, your grocery bill, they're all the cost of keeping the structure alive. Inflation isn't an accident. It's the system's blood sacrifice. Its way of saying, we'll survive another year, but you'll pay the price. Demographics make it worse. Fewer young workers, longer lifespans, shrinking birth rates. Japan now sells more adult diapers than baby diapers. That's not just tragic, it's unsustainable. Social systems collapse when there aren't enough new contributors to support the old promises. And yet governments keep doubling down, printing, borrowing, hoping the base will somehow expand again. Every crisis brings the same response. The Great Depression brought the New Deal and fiat expansion. The 1970s oil crisis gave birth to the petrodollar. The 2008 crash unleashed trillions in quantitative easing. The 2020 pandemic, even more, at a scale once thought impossible. In every case, the answer was never reform, it was expansion. Build the pyramid taller, push the reckoning further away. Meanwhile, the winners never change. Those at the top, the bankers, the corporations, the policymakers, extract the most. They create money out of nothing, buy assets with it, and leave the debts for everyone else. The savers, the workers, the latecomers, they hold the bag. Always. And this is why the pyramid analogy matters. Because once you see it, you can't unsee it. The global economy doesn't collapse outright, because governments possess tools Ponzi never had. They can print money, levy taxes, wage wars to sustain the illusion. But the logic remains identical. It demands endless growth, endless debt, endless belief, and no pyramid can grow forever. So what's the lesson? First, stop believing the system was designed to serve you. It wasn't. Inflation, debt, bailouts, these aren't bugs. They're features. They're how the structure maintains itself. Second, understand that real wealth doesn't live inside the pyramid. It's in the things that survive outside it. Your skills, your networks, your tangible assets, your understanding. Because real financial freedom doesn't come from waiting for rescue. It comes from knowing how the system works, so you can step outside its traps. The global economy may not legally be a pyramid scheme, but structurally, it rhymes with one. It survives only as long as the base keeps feeding it. And history has shown, when the base weakens, when the belief fades, when the new money dries up, the fall is brutal. History doesn't repeat, but it rhymes. And the rhyme here is clear. If you mistake a pyramid for a foundation, it will collapse beneath you. If this gave you a new perspective, hit subscribe. History has the answers. You just have to know where to look.